Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if companies are building an empire or just digging a hole for their money. Today we're looking at XPLR Infrastructure and their latest report that tells us about a pretty big sale. So XPR Infrastructure, they are a big deal in getting energy to us, like gas pipelines. They just filed this report and it looks like they've sold off a chunk of their business, a natural gas pipeline operation in Pennsylvania. Now, big sales like this can mean a lot of things for a company. So let's decode what this actually means for XPLR. The main event here happened on the 22nd of September 2025. That is when a few of XPLR's subsidiaries, which basically means companies they own, sold their parts of the Mead Pipeline Company. They also sold their stake in something called Redwood Mead Midstream MPC, which also had a piece of that pipeline. This pipeline business they sold, Mead Pipeline Co., was all about natural gas in Pennsylvania. Think of it like selling off one of your smaller workshops to focus more on your main factory. XPLR did this because it was part of a deal with a company called APC Holdings LP and ACI Mead member LLC, which are connected to a big investment firm called Ares Management. Now, for the really interesting part, XPL Infrastructure received a whopping $1.1 billion in cash for this sale. That is a massive amount of money. Selling off assets, especially for such a huge sum, can really change a company's financial picture. It gives them more flexibility. They could use this money to pay down debt, invest in new projects, buy back their own stock, or even distribute it to their owners. The important thing is that it is cash that can fuel future growth or shore up their finances. Following this big sale, XPL also filed some important financial information that shows us how this sale would have impacted their business if it had happened earlier. They included what are called pro forma financial statements. You can think of pro forma as if they are showing us what their financial results look like, as if this sale had already taken place in the past. These pro forma statements cover the years 2024, 2023, and 2022, and also the first 6 months of 2025. This gives us a good look at how the sale affects XPLR over several periods. While we don't have the exact numbers from these pro forma statements in this filing, S-Text, the fact they provided them, tells us they want to show the market the positive impact of shedding this specific pipeline business. It is a way for them to signal that they are streamlining their operations and focusing on their core strengths, which they believe will lead to better financial performance. Finally, the report is signed off by William J. Goff, the Controller and Principal Accounting Officer. This means they've gone through all the proper channels to make this filing official. Now, looking at this from a bigger picture, XPR Infrastructure is a company that operates large-scale energy infrastructure. They own and manage assets like pipelines that are crucial for transporting energy. Companies like this often have long-term contracts and stable revenue streams, but they also require massive capital investment and are subject to regulatory oversight. Selling off a pipeline business, especially one as significant as the Mead Pipeline Co. assets, suggests a strategic shift. They likely divesting from assets that are no longer a core focus, or perhaps those that require too much capital compared to the returns they generate. This $1.1 billion infusion can be a game changer. If XPLR was carrying a lot of debt from building or acquiring these assets, this cash could significantly reduce their financial burden, making them a safer bet for investors. It also frees them up to invest in areas where they see greater growth potential or higher returns. For example, they might be looking to expand into newer energy sources or upgrade their existing, more profitable pipeline networks. However, it is also important to consider what they are giving up. Pipelines are the arteries of the energy system. Selling off a part of that means they are reducing their overall footprint in that specific part of the market. The key question is whether the remaining business is strong enough and has enough growth prospects to compensate for the sale. In the absence of detailed pro forma financials directly in this text, we have to infer the intent. Companies typically highlight asset sales when they believe it will materially improve their financial health or strategic positioning. The large cash amount suggests this is a significant move. It is like a Major League Baseball team trading a decent player for a huge chunk of cash at the trade deadline. The team might be rebuilding or retooling. From a Warren Buffett style perspective, we're looking for companies that have a clear competitive advantage, strong management, and are making smart capital allocation decisions. Selling a substantial asset for $1.1 billion, if managed wisely by reinvesting in more profitable ventures or reducing debt, indicates good management. The potential risks here would be if they have overvalued their remaining assets, or if the market for energy infrastructure shifts unfavorably in the future. We also need to consider if this sale is a sign of underlying weakness in the sold division, making it a necessary but perhaps not wholly positive move. Overall, XPL Infrastructure S decision to sell its stake in the Mead Pipeline Co. for $1.1 billion seems like a strategic maneuver to strengthen its financial position and potentially refocus its business. The company is essentially repositioning itself. This move could lead to greater financial flexibility and an improved balance sheet, which are positives. The critical factor will be how they deploy this capital in the coming years. Are they investing in growth areas, or is this a defensive move to shore up a struggling core business? Without seeing how those pro forma numbers truly shake out, it is a bit of a wait-and-see game, but always keep an eye on where they put that $1.1 billion to truly understand the long-term impact. Alright, that is our breakdown of XPLR infrastructure. S latest filing. What is your take on these numbers and what they signal for the company? S future. Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.